Alrighty, let's get into it. So in this video, I'm going to be talking about a very simple strategy that you can use to make a living, to just want like a consistent model. Something on a platter, right? I'm going to give it to you right here, right now, on a platter to you. Okay. So what are the rules? Well, first you need to do the work on the higher time frame. You go to your daily chart, okay? Here's what you need to do on the daily chart, because the daily chart, it's a very important time frame. Right, the higher time frame tells you what price really wants to do. Then you can utilize the lower time. So like when you have that higher time frame storyline, you don't get lost in lower time frame intraday price action. Okay, you understand what is really happening here, and we're going to connect that. So with GBPUSD here, we're going to go over a couple different examples, but you can see like right here on this particular day, we put in a swing low. Okay, right here. We got the higher time frame sell side. It cleaned it out right there. And then here on Wednesday, on this particular day, you see it puts in that swing low, low slow in the middle, higher low on the left, higher low on the right. This is what I call third candle draw. Okay, third candle draw is that swing point, because that third candle of that price swing is a very sensitive price point. It's going to be a very strong magnet. Now, you do not need only swing highs or swing lows with the strategy that I'm about to give you, because I've given strategies like that in the past, but just kind of to make that clear, that isn't what this is right here. It can be in an upswing, it can be in the downswing, it's fine. Okay, you don't need to only have a setup whenever you have a swing point put in, but I'm just saying like that was what based this. Okay, now if you are going to have a buy setup, it needs to be in that upswing. What I mean by that is like it has like that's just like we have like the swing low put in right here, for example. It needs to, like, while you're in that upswing, while it's continuously running out the highs and you don't have any like swing high or anything like that put in, you're looking for buy setups. Just like over here, you put in that swing low, it's ramping up. In that upswing, you're not trying to fight that. You're not trying to fight any of that. Your objective with this strategy is to continuously run out previous day's highs and previous day's lows. Okay, so when you're in an upswing like that, your objective is to run out previous day's highs, boom, run it out, and to continuously run out these highs, and then the opposite for a downswing. So the thing is, I got that swing low put in, okay? We took out daily sales that recently, it's bullish structure, and I got this third candle draw up here. Right away, when you see that daily chart, you know what your target's going to be. It's going to be the third candle draw up there, okay? So now usually what you would want to see in a case like this on the daily, though, is how price closes above the previous day's highs is key. So like, for example, this came up right here and it did technically respect that previous high right there, which isn't really what you want to see for a bullish scenario. Whenever prices, but I'm giving it more leniency here because we're going to do top-down analysis, and I'm going to show you a few other things on the higher time frame 4 hour, because you got to look at the daily and you got to look at the 4 hour to really give you that full complete picture. But the fact that you get that swing low put in right here, it helps it, because we got our third candle draw in here. But when it's already in that upswing and it's pushing up here, you want to see it displace above the previous high and close above the previous high. But we have the swing low in this point, so let's go to the 4 hour chart. So if you go to the 4 hour chart, of course, you want to see bullish structure. And, if you're in that upswing and it's doing this, it's going to, very likely, of course, be bullish structure. So it's going to be consistently putting in higher lows here, making new highs, which it is, and that's what you want to see. So you can see I have it marked off right here. That was Wednesday's highs. You already know that's going to be your potential target, depending on what you want to do with this strategy. I'm not saying you got to do it exactly how I'm outlining here. You can make it your own, but that is what your target's going to be, okay? And then you come into a brand new day here. Okay, so you've already confirmed at this point, by the way, that you have that swing low put in on the higher time frame daily chart, okay? And you see this thing, it's bullish structure here, it's pushing up. And now you want to see this high. That's previous day's highs that I was just talking about, the high, that third candle, the swing point. You want to see that left intact. If price was to, for example, come up like immediately after midnight and then tap that out, run that out, and then pull back later, it disqualifies it for a buy setup. Okay? You want to see it leave that liquidity intact. I always tell you, like, the liquidity is what gives it validity. So you have that draw up above. That's what it's going to want to seek. Now you need to go down to your lower time frame. Okay, so, and I'll also say this a lot: wait for liquidity or you'll be the liquidity. Okay, because now we've identified our draw. That's what you did already. That's what we've done so far, which is a very important part of this. We've identified what the draw is going to be because we got that swing low put in on the daily chart. Okay, so we got that draw right there. That's intact. That's Wednesday's highs, and then we come into look after midnight into a brand new day right here. So what do I need to see next though? Before, because I know I want to shoot for this right there. I know that's my target. That gives me my bias, my draw. It's good because it's got this liquidity draw up here, third candle draw. But I need something to frame it. What's that thing I need to frame it? I need a liquidity grab. It goes back, wait for liquidity, it'll be liquidity. So then my job is to identify where that sell side liquidity is. I need to see stops taken first before it comes up into this level. Okay, so then what do we have right here? Well, right here we have what's called Asian session low sell side. So what you need to understand is Asian session begins at 19, right there. So it's 7 o'clock. So 19. And then it goes until midnight. So then that gives you your Asian range. That was the low of that Asian range, meaning that's a significant sell side liquidity pool. With this strategy for a buy setup, you absolutely need Asian session lows taken. For a short setup, you need Asian session highs taken. It's just going to be the reverse of what I'm doing right here. And you want to see bullish structure, of course, as well. That'd be ideal. Like, you know, of course, with your 4 hour, your 1 hour, 15 minute. I'm not saying you can't get some nice trades and it's not something you can experiment with, you know, counter trend deals. But I'm giving you like the highest probability scenario. And the highest probability scenarios are always going to be when you got the overall trend backing you. Okay, so you can see how you got this thing is very bullish. It closed strong off the highs. That's what you want to see for these scenarios. You want to see it close strong if it's a bullish scenario. You want to see that strength. You want to see that trend backing you. Okay, and then coming into, you know, this is in London, but you can get setups in New York as well with this. You're going to look for your liquidity run. You need to see Asian session lows taken. Okay, and then you need to see it sweep that low, and then that's where you need to go in and look for your shift. So of course, what I do is I go to the 5 minute. I used the 5 minute execution. So then we ended up getting that shift here. Okay. So you can see it came down right there. We got our fair value gap confirmation in there, and then we get our strong close in there. See what I mean? Fair value gap, and then you get the strong close a little bit later in here. So guess what? You have a bullish shift. You have a bullish shift. This is after taking out Asian session low sell side. So that was the liquidity that framed it. We need a liquidity grab, and that's Asian session lows that's serving us that liquidity grab. Okay. And then it gives the bullish shift, fair value gap, strong close. That's a shift. And the very important part here, we still got that draw intact. If it came up first things first and it even tapped above that in the slightest, I wouldn't be as interested now. Okay, because now that draw, that liquidity's been taken, but it hasn't in this case. And that's what makes it that magnet, that strong magnet for price. It's still in an upswing on the daily chart. You know it's going to run out this level right here. And it only has this liquidity down here. And it's showing you that it's respecting it. And that's key. You want to see price respect the level of liquidity that it's taken as well, because it's a stopper and signature. So because it's respecting it, you get a shift, and then boom, that's your trigger. You run out the hop above. All right, so now I got another example here that I want to go over. Now, with this strategy, I want to make clear that it's best to do multiple pairs, various pairs. I know some people, for whatever reason, are so fixated and only messing with one pair, which doesn't really make, I mean, I get, you know, kind of, you know, one of the mindset is just to focus on one thing. But if you're looking for very specific signatures, then it doesn't matter. If you're looking for very specific signatures, you know what you're looking for, then there's no issue with, you know, utilizing various pairs. I recommend at least all the majors with this. If you want to introduce more, that's on you. You could absolutely do it if you want to. But I would at the very least look at the majors, because you're not going to be getting setups left and right. And that's what you want with this strategy, then just leave the video now. Okay. And with your mindset, you're probably not going to make it, because you got to exercise some patience here. You got to exercise some type of patience. And if that's an issue for you, that you got to be clicking buttons left and right, then you're here for the wrong reasons. You got the wrong mindset completely. Like, you got to be able to, I'm giving you a strategy on the platter here, but it's for higher quality deals. Okay. When what comes with higher quality is, like really high quality, is you don't get it left and right. You don't get setups like right here, boom, right there, boom. And it's just like a million different things. No, you got to exercise some patience. And if you can't do that, well, then that's a psychology issue on your part that you need to get down. Okay. I can't be patient for you. I can't be disciplined for you, but I can give you a framework here. I can give you a framework that works, and that's what we're doing. Okay. So now with GBPUSD, I got another example here that I want to go over, because as I told you, I'm going to give a few different examples. So look right here. And I'm going to zoom out here, because you need to, because sometimes you could be on the daily chart and it looks like it's taken out previous day's lows, and it hasn't, because you want to go off midnight for a brand new day. Okay. And if TradingView had a way that I could set up my charts like that, that'd be great. But I don't think they do. But here's the thing. What do we make of that daily chart? Well, it's in the downswing, just like this. Like, look right here, highs down the middle. It's kind of like the opposite what we were saying just a second ago. Highs down the middle, lower high on the left, lower high on the right. You have third candle draw. And again, you don't have to have only, like with this strategy, it's not just swing highs or swing lows. This is the two examples that we got here. But it's okay even if it's in like that downswing. Like say for example, like it expanded right here and then it just had a strong close beneath the previous low. It's coming down here, no significant support. But it's not really a fresh swing high anymore. It's still fine to take the trade. But what you want to see when it's in that downswing, this is very important, is you want to see it have a strong close beneath previous day's lows if it's in that downswing. Just like over here, for example, you can see, look, I got a swing low put in, low slow in the middle, high low on the left, high low on the right. But then look what it does right here. Strong close, boom. And that's what you want to see. See how it's strong close right there on the 19th of August? And then look what you want to see right here. Boom. Comes up again. See how it has a strong close above that high right there? And it's continuously having this strong, that's what you want to see in a bullish environment. Because how price, like what it does with that previous high is key when it's in that upswing. Of course, you want to see very little higher time frame resistance that it's coming up into when it's doing this. And then you just want to piggyback that. And then your objective is to continuously run out the previous day's highs. But you want to see it have that strong close because how it treats that previous high is very important. But in this case, we have that swing high put in. Okay, we have that third candle draw right there. So I know it's going to want to seek the low of that candle right there. So what do we do next? Well, as I was just saying, we'll actually go to the 4 hour first as well so you can see the 4 hour chart here. Okay, so you can see the 4 hour chart here. It's been selling off. I mean, obviously it's a bearish structure here. And you can see what it ended up coming up into. It did take care of Asian session highs, but then you got higher time frame buy set up here. But let's unpack this a little bit deeper because go to the intraday or the 15-minute here for a moment. So we come into a brand new day right here. Okay, so now look at my cursor. This is where you enter a brand new day and you already know right away what you're going to be targeting. That's the great thing here is you have very clear rules. You know exactly that you're going to be targeting previous day's lows. And if it comes down, it takes care of that right away, then it just disqualifies to play. So you want to see that left intact, okay? And then it pushes up first. That's what you want to see, okay? So then Asian session highs actually on this one, it got cleaned out fairly quickly. You see what I mean? So it gets cleaned out fairly quick. It doesn't really respect that level, actually. It reached for the higher time frame buy side. And let me make that clear. That is fine. That is fine. But like you just said a second ago, you want to see it respect the Asian session highs buy side. Well, if it doesn't respect it, though, then look up above and look for your next point of interest. Look for your next liquidity pool. You have higher time frame buy side there. You have that 1 hour level there. So the fact that it didn't respect that is a clue that it does want to come up and reach for this, and it does. But now you have a new point of interest. You have Asian session highs taken, so that's good still because that liquidity's gone and you still got this liquidity down here intact. But now since it didn't respect that, just look for your next point of interest up above. You got a level right there. Boom. That becomes your next point of interest. But you need at least Asian session highs to be taken. Okay. You need that liquidity to be done with, and then you want to see this previous day's low still intact. So then it comes up to this. This is your next point of interest to see if it can respect this one now, and it does. Okay, so you actually got the 15-minute shift and the 5-minute shift. You see, you got that 15-minute, but just for the sake of example, you can see this 5-minute as well. See what I mean? So then guess what? You get that shift right there, fair value gap, strong close. You could shoot for this low down here. I'm not saying you got to do it exactly like I said. You may decide, oh, okay, I want to go with a little bit more of a low-hanging objective profit target. Nothing wrong with that at all. But I'm saying this is a very clear established PT that you can go with. So for those of you that are on the fence, kind of looking for that model, looking for clear directions, just shoot for the low right there. Previous day's lows, run it out. It's always going to be the same PT. Always, because you got to have that level intact with this. If you're getting a short scenario, you're going to need previous day's lows intact. If you're going to get a long scenario, you need previous day's highs intact. Okay, so we got that level intact, and yeah, you got your shift. Asian session highs has been taken, higher time frame buy has been taken. You're in that downswing, and then this is going to be the next level because now it's flipped the switch. It's flipped the switch. Okay, and now it's going to want to draw down into the opposing sell side down below. And I like to use this analogy because it kind of cleans it up a lot. Think of price like a car. Okay. For this strategy and all my strategies, I need that liquidity to frame the move. Okay. Because we've already identified what our destination is going to be. That's going to be our destination right there. It's previous day's lows. We're in that downswing. We got that swing high put in. So we know it's going to want to seek that. We already formed the bias. So price wants to head to this destination, but it needs gas. It needs gas before it can make the trip. Otherwise, it's just going to die. It's on empty. Okay. So we need to stop at the gas station and then we need to pick up that gas. Liquidity is the gas, folks. Remember that. Liquidity is the gas. So you have Asian session highs taken already, as we already said, but it didn't really respect it. It just crushed it and it ramps up, and that's fine. It needs more gas. It just needs more fuel. All right. So it comes up, takes out this basket up here. It's filling up the tank right now. It's filling up the tank. Doing all this, just filling up the tank. It's getting up that gas. All right. So when does price tell us when it's ready to make the trip to the next destination? Because we've already identified where the destination is going to be, and it's this sell side down here. It needs to start up the engine. So I'm listening for that engine, and the shift in market structure is price starting the engine. Right there, starts up the engine, and then now we're ready because now it has more fuel, it has more gas in the tank, aka liquidity. It can now make the trip down into this, but beforehand it can't do that because it's got this sell side down here that it's reacting off of, so it needs to match it with that opposing buy side. You see? So then that's what you would shoot for. And then of course no stop can be above the high where the shift occurred. So like this is like the high where the shift occurred. So, and that's how you would approach it. Okay, and here's an example of one that's not like a fresh swing point. Like I was saying, that's perfectly fine. So here's what I mean by that. We had the swing low put in like down here, but now it's in an upswing, and then look what happens right here. Look at my cursor. You see like this September the 16th. See that really strong close right there? That's what you want to see when it's in that upswing like that. You see how you have previous day's highs right there? Look at my cursor, and you see how it has a strong close above that? It doesn't like come up, wick through it, and then close weak off that high. No, it demolished it. It just it displaced above it, closed strong. That's what you want to see in a bullish environment. You want to see that strong close like that above the previous high. It's fine if it's in the upswing. You don't need to only be having trades when a swing low or a swing high is put in. You don't need to do that. But when it's in that upswing, how it closes above that previous high is key. So you can see how it's got that strong displacement above that high. When you don't have a fresh swing point and it's in the upswing, you want at the very least, you want to see have a strong close above the previous high. That's key. That's key. And another thing to note is it didn't really have any major opposing resistance in here as well. That's another big thing. So you can see like it has the spots up here, it hasn't reached that. And it's ultimately drawn to that, as I was making very clear as I was talking about in chat. Because I know it kind of looks like, I can just go back in hindsight here and just cherry pick examples. Everything that I'm talking about right now, I'll talk about in chat. Okay, on mic with my mentees, but also I'll upload charts for the free Discord as well. If you want to be a part of that free Discord chat room, there should be a link to that in the video description. So if you guys do want to partake, learn a little bit more from myself, no charge whatsoever, then there should be a link to that down below. But as I was saying, we're in that upswing right now. We get this really strong close, and that tells me a lot right there, folks, because each candle tells you a story. Each candle tells you a story. So when I see that, the first thing that comes to my mind when I see something like that is conviction, is strength. Okay. So then what happens is, let's go back to, for a moment here, let's zoom back in. So you see, we have the 16th right here. So you found midnight. See what I'm talking about? So look right here. Actually, this will make it a little bit easier to see what I'm talking about here. Let me put in like a vertical line at midnight. So it'll just be, I used to do that all the time, but I just kind of got out of the habit of doing it. But see, because it can kind of clean it up a little bit to just show you where midnight was at. We're coming to a brand new day. So like you come to a brand new day right there, you see, and you see how previous day's highs is still intact. So it's still intact up there. That's what you want to see, because that's your draw. That's going to be your target, remember? It's always the same thing. So you got that really strong close. Look at this thing, folks. The entire day, this thing ramping up. Really strong close right there, displaced above the previous high. Again, there's these highs up here, just displaced above it with aggression, with strength. And then you have this little pullback off the highs, which is fine. But here's the thing. It's also just like I was saying. What did I tell you a second ago? For the best place, you want to see the structure bullish as well. You don't want to be fighting the trend. Like you're in that upswing. It's very strong, and you're piggybacking that momentum. You want to see something. You want to see that. You want to see a strong close, and you just want to see like that light pullback off the highs like this. That's what you want to see, and that's a very important note moment. You want to see just a light pullback off the highs, okay? Because you're piggybacking this trend. And then what you'll see is after you have that retracement off the highs and you come into a brand new day, what you'll see is London session was where? Because guess what? Like whenever you're coming off those highs, London session, my mistake, Asian session. Asian session is where you'll see like that consolidation form. It'll come off the highs and the volume dies. You go into like consolidation. So what you want to see next is, let me get my other drawn tool on again, my other vertical line, 19. Now I'm going to show you where that's at. There's Asian session. You see that right there? Look at that. And this is that pocket of liquidity that you need to be keeping an eye on there that frames your reversal. The first one, at least. If it wants to sell off through that, that's fine a little bit. And then if it has like another point of interest down below, that's fine. But this is the first one. You want to see if it respects it. because it'll tell you if it wants to respect it or not. It'll show you if it wants to respect a level of support. So you have this pocket of liquidity in here, and now you're coming in here. Of course, like personally, I'm not saying you got to do the same exact rules as me, but I wait for 3 o'clock to start hunting. So guess what happens? Look right there. That's a stop run. That liquidity right there, you always, for a buy setup, you always want to see that taken. Asian session lows, you always want to see taken. And when it does that, you want to see it leave that high up there, previous day's highs intact. That is so important. I can't stress it enough, because where a lot of you get in trouble is like you're grabbing these retracements and you're getting stopped out repeatedly because you don't understand, you don't have a clear draw. And that's what I'm doing with this strategy right here. That it just completely just gives you that framework. Like you have a clear draw up above, and that right away is going to help so many of you. And that's what a lot of you are doing wrong right now. Okay. So like a lot of your ships and stuff are failing because you don't understand this aspect. You have that strong draw. That's like that magnet for price. And then this is what we call a manipulation swing lower. That's manipulation right there. Okay. It's running out this liquidity, and that's what you want to see on the manipulation, right? You want to see it run out the Asian session lows liquidity. So you see how, because we have that higher time frame perspective of where the ultimate draw is going to be, previous day's highs, right? We understand it's going to be up there. So then we're not fooled by these little intraday fluctuations like this, because we understand, oh, hold up though. That right there is a fake run. And yeah, like you can actually build a turtle soup model around this too, because you understand that this is an area where you can anticipate, okay, price is going to be ramping up here soon. You could trade like turtle soups off these areas too, which are good areas to look for it. Or you could do your change in the state of delivery or your shift, whatever you want to do. Like I said, I'm giving you a framework. You can make it your own and add your tweaks to it as you want. But you understand, okay, this is the draw. That's the higher time frame draw. And now this is the liquidity that's going to frame it, drop down to a lower time frame. Again, you could do turtle soup and buy weakness on these plays. You could. But then what I'm looking for here, look right there. See that? There's your shift. Shift to market structure, also changing the state of delivery in there. You can see you got your fair value gap, strong close. Guess what? Seek opposing buy side. Run it out. It's that simple. It's that simple. There's liquidity to frame it. That was the fake run lower. There's your change in the state of delivery or your shift in market structure, whatever you want to do with it. And then you have your target up above. You clean it out. You clean it out. And then that's what you do. Then guess what? The second that high is done with, you're done with the play. Okay. But what if it goes higher? And that's where a lot of you are going to get in trouble again. It's because you want to be trading literally everything and being a part of every move. And that's such a beginner mindset. And we've all been there. Okay. So I'm not like dogging on you when I say that, because like everybody's been there. When you're a beginner, you try to catch every little thing. Like you say, but look at this example, Mike. Like it took out previous day's highs and it just continued to run up. Look how much money I left on the table. You got to get over that, and you got to really understand that anything outside of the plan is noise. Okay, that's purely a hindsight issue. Because guess what? And I'm giving you this lesson because I'm preparing you for it. Because there's going to be a lot of folks that are going to get into this mind frame when this happens. Because then they're going to see this strategy. I mean, I'm not getting setups left and right like every single moment, and then they're going to have that temptation to be more active when I'm giving you like super high quality trades set up like right here on a platter. But they're going to have that temptation, and you got to understand that. That's only a hindsight issue, and you wouldn't have had that issue if it was the other way around. Meaning, let's just say this is your target, and you took profits there, and then immediately after it ran out that high right there, this thing just dumped, and it just started making new lows. It's just getting clobbered now at this point. You're not having that conversation of, oh, I want to maximize this, right? No, what you're saying is, oh boy, I'm glad I bailed at my target. I'm glad I did what I said I was going to do. But then what you're going to see a lot of people is, okay, then they'll have the scenarios where it continues to run up. Because if it's very bullish, it'll continue to run up. But who cares? Who cares? Like, why do you need to partake in that? You take the meat of the move and you're done. You can build a living doing this. You can get rich doing this. And I'm not exaggerating. I gave it to you on a platter. I gave it to you on a platter. You learned it right here for free in this video, right here. Right there, I just gave you more information than most of your gurus are ever going to give you. Ever. In one fucking video. You're welcome. Now, do something with it. All right, watching this video ain't enough. You got to go back test. All right, you got to do the data collection. You got to do all this stuff because you got to build up that confidence in that psychology aspect. You got to build that confidence up. You got to journal your trades. You got to go in and look for it real time. You got to do the study. And I'm here to give you the framework. For those of you that lack direction, I'm giving you direction. There's no excuse. There's literally no excuse. Okay. Those are clear rules. How is that confusing? Right? Okay, if I'm in an upswing, I'm only looking for buy setups. Okay. I want to see a swing low, third candle draw. And then after that, you want to see a strong close above each of those highs when you're looking for that buy setup. And it's the opposite for a bearish scenario. Okay. You need to see previous day's highs left intact for a bullish scenario. You need to see the liquidity run to frame that move. Asian session lows. You want to see the shift. And run out the high. And again, if it doesn't respect Asian session low sell side, that's fine. You could look for your next point of interest to frame it off of and look for your shift. It's so simple. It's so simple, but so effective. Okay, watch this video several times if you need to make it really stick, and go into your charts and look for it. And you'll see what I'm giving you here is just pure gold. Okay. Again, if you do want to join my free Discord where I plug a lot of these charts and have free educational material, there'll be a link to that in the video description. If you did enjoy the video, make sure you leave a like, subscribe, turn on notifications so you don't miss an upload going forward, and I'll see you later.